we do not have a clearly defined triangular pattern, so this is not the case with Ethereum. Okay. But nevertheless, we would, if we're having an ascending symmetric triangle like we're showing here, this is a one-out chart, we would consider to close out at the triangle top, whatever we are holding long. Triangle top comes in at 3,400 and 3,450, because this is still going to be doing more corrections or consolidations, and so we're looking at the correction will take us to 3,128. Assuming of course that level 3, there is a level 1, 2, all of this is a 3, did an internal 1 and a 2, 3 and a 4, this is a 3. The 4 will really correct you to the top of that level 3 because of the ending diagonals that we're seeing all over the pattern, and we expect to be contained between the two necklines of 3 and 1. There's high degree 1 and high degree 3. Of course, there's a lower neckline on the 4-hour chart, but it's still that. This comes in at 3,019, level 1, and level 3 is at 3,400. Exactly 3,400, 3,395. So the correction should take you to 3,150, 50% between the two levels, 61.8% between the two levels defines the lower boundary of that ending time, of the higher would be a buy. This is the projection. We would rather go on, of course, triggers, because triggers are confirmation. So whatever we're holding long, we would want to close out on the next spike higher to 3,440 and 3,450 and even 3,400. We want to get that correction to the lower boundary of the ending diagonal. This is the same ending diagonal we're seeing on the 4 hours. Over here we're having a very small internal fracture of it. We are at the top of that big ending diagonal. Okay, we would expect to have a retraction there because of this top in 5. So rejection there takes you to 3,020, takes you to 3,050. We're looking at the 3,050 in particular. 3,100, sorry, 50. 3,150 is this level here, 3,188, 3,128 into the primary growth interval, still inside of that ending diagonal, and a bounce at the neckline. If we are longs, this gives us a warning. If we are long again, this gives us a warning to close out our longs and stand out from the market until we get to see these levels 3,180, 3,200. Of course, this correction, a bounce higher, should be used to close profits. If the market does tank, so it goes very quickly lower for any reason whatsoever, you would want to have a hedge, sell hedge just below this point, 3,209. To if you're carrying long internal pivot levels, you will remember them. So breaking below, this is R1, resisting here R1. If we break below that red arrow, we are broken below 50% between pivot and R1. We go to the pivot, take profits at 3,150, 3,200. For that hedge, if the market is as showing breaks out of this inverted head and shoulders. At that point, 3,200, it will take time, but we will be bouncing at some kind of either 200 moving average and the lower boundary of that ending time. We expect to do a complete internal segregation by tomorrow so that we can measure all the internal waves and therefore project short-term trading techniques for this, because we're going into a very protracted triangular pattern that is going to be supporting or at the neckline. We're doing shoulder pattern, very protracted triangular pattern. So we cannot trend trade it.